It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel, and in a miraculous turn of events, the market has pretty much recovered almost entirely from that little mini dump that we had yesterday. We actually put in one of our classic patterns, one that we have not seen in quite a while, which is the BART Simpson pattern. If you don't know why they call it this, it's essentially because Bitcoin either pumps or dumps, and then it goes sideways, only to go exactly back to the levels right before it fell, right? So in this case, we do have an inverted BART Simpson head. So in today's video, I actually want to talk about something that Bitcoin could be doing right now, a textbook formation, which could be absolutely incredible. It could be a really great opportunity if you are trading Bitcoin. I'll show you exactly how to trade this pattern to benefit the most from it. I also want to talk about in today's video the fact that we do have more on-chain data suggesting a bullish narrative for Bitcoin. Yesterday's video, we were a little concerned about, that miner from 2010 who was selling his Bitcoin. Well, in today's video, that's going to make that news look completely obsolete. And finally, I want to end on a bit of bizarre news from the US CFTC, which could potentially not be too great for U.S. citizens, especially in the tax arena. Yes, things look like they could be getting a little bit more complicated, and we're going to have to talk about that, and you're going to want to stick around to the end if you are a U.S. citizen. So in today's video, super quick, we're going to show you what the pattern is, how to trade it, update news also on Ethereum. We had some good news come out, as well as this crazy CFTC news. If that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. And let's dive in directly to the charts today, because this is very, very exciting what's happening. Now, in yesterday's video, we did speak about this potential sort of a head and shoulders pattern forming, right? We did, in fact, have the dump. We didn't dump as low as the neckline would have anticipated it to go. However, what I do want to show you is the fact that Bitcoin could, in fact, now keep in mind, this is not fully confirmed just yet. So, I don't want to hear in 2 days, oh, you said this was happening, but it looks like we could, in fact, be forming a textbook falling wedge pattern for Bitcoin. And we know that this is an inherently bullish pattern. Now, this is exactly why in yesterday's video, for everyone who was in a short, I said I would not be entering a short at these levels. I would wait and see what happens. Currently, right now, we did have the BART Simpson up. However, if you do look at this pattern, there still is the possibility for Bitcoin, to eventually fall back down here, even putting in a little bit of a lower low temporarily. Like I said, we still have that possibility of visiting between the $52,000 to $55,000 level. But if that is the case, we would anticipate a massive breakout to the upside, most likely Bitcoin putting in new all-time highs. So if you are looking to trade this, there's two possible ways. You can wait for the breakout. However, that's a little bit more risky because often we do see these wicks that can come down and retest it. The safer bet, not financial advice, obviously, but the safer bet would be to potentially wait if you're looking to put in a long and see if we actually start to get a bounce off of this trend. And currently at that level, it would be sort of around the $57,000 level, but obviously it depends on, price action. Obviously weekends get a little bit crazy, but just to show you guys how this has actually happened before, you can actually see we started putting in a bit of that down here as well, right? And you could see that, yeah, we did fall out of it a little bit. This is why you got to be careful. Sometimes you set these stop losses, you get stomped out, and then the price just reverses anyway, right? So, essentially we were getting tighter, we were coiling tighter and tighter, and finally we had the massive, massive blast off, and it does look like we could be putting in that formation again. So be patient. We do have the weekend coming up tomorrow, Friday into the weekend, obviously. So this is what I'm looking at, and if this does play out as expected, this could be an incredible, incredible opportunity for not only a Bitcoin trade, but also for Bitcoin to just break, absolutely smash the new all-time highs. And I had to show you that, but clearly wait for confirmation. Do not rush anything. Let the market come to you, okay? Best advice you're probably going to hear today. Let the market come to you. Do not try to chase the market, okay? Now, having a look right here, obviously on a bit of the macro on the daily, I still am looking at the blue zone territory. Yes, I do believe worst case scenario, we could see a $46,000 Bitcoin, but I'm only telling you that just to let you know what I'm seeing. But right now, things are looking incredibly bullish. I would not be a Bitcoin bear at this moment, although we could see a lower Bitcoin price than we have seen in the past few weeks, I still think ultimately it is going to lead to a higher Bitcoin price. As you can see back here, the same concept with the falling wedge. Here we go right here. Okay, take it from here to here, and you could see we had the massive blast off. And if Bitcoin is in fact doing a smaller version, it's very possible that we come back down to the green level. But for me right now, I'm leaning quite bullish on Bitcoin, even if we do have a little bit of a pullback over the weekend. As long as we stay within this formation, as long as we stay above this this resistance as support, then ultimately things are looking very, very good for Bitcoin. So I will keep you updated on that. Make sure that you do get subscribed to this channel if you guys want the more up-to-date updates on the trade, that if you guys are interested. Obviously today we have the meme coin that everybody's talking about, Shiba Inu, attempting to make a massive recovery. It fell, and a lot of people that I saw a lot of people online were shorting it. If you did get into a short on Shiba Inu, congratulations. If you didn't, once again, I'd be skeptical. It may be forming a bit of a pattern right now. But that is one thing I wanted to mention. Also, the fact that Shiba Inu apparently is speculated to be the reason that Coinbase was down for over 15 minutes. They said that it had something to do with the speculative frenzy of potential Shiba Inu trades, etc. So yeah, Coinbase was down. But if you guys are interested, by the way, from what I'm aware of, there are several places that you can trade it. They did just add, you can see right here, Shiba Inu has been added to Bybit. So if you guys are interested in trading that using leverage, you can head on over to Bybit and do that as well. You can long Shiba, you can short it. If you think that, it's a little top heavy right now and you want to short it. Also, you can check out Femex. They have a lot of different options. They have tons of trading pairs. And like I said, guys, if you are interested, make sure that you check the pinned comment in the description below. There are lots of bonuses for deposits and welcome. They have $10 a month spot trading. $10 a month, that's like incredible compared to some of the fees that you pay, especially if you're using decentralized exchanges. So make sure you take advantage of those below in the description of this video in the pinned comment. But one thing I want to talk about is a continuation of what we were talking about yesterday, which was the fear over, this miner from 2010 holding his 50 Bitcoin and finally after 11 years deciding that now is the time to sell. Well, we can see right here, BN Crypto actually was looking at these two different indicators. These are on-chain indicators. So this is actually looking at what is happening on-chain. We have liveliness and we also have average spend output lifespan, or the ASOL. So liveliness is used to determine if old coins are being spent, and ASOL measures the average age of each transaction output. So the higher reading means that coins are being transacted that haven't been previously moved for a long period of time. And you can see right here, what they were actually concerned about was the liveliness did have a bit of a spike right here, and this was arguably considered a bearish trend, right? They were seeing that this was increasing, so they were worried that this would be somewhat of a top. But ever since that peak, it's actually been gradually decreasing and decreasing, once again showing us that more people, more traders, investors, whoever it is actually looking to hold their Bitcoin for the long term rather than selling them, right? So we did see that we had this right here. We had the distribution, followed by the accumulation. It looked at this point like it was starting to get bearish, but then we saw the hodlers were stepping in, and we also had a very similar reading on the ASOL, and it says that there was some profit taking on the initial bounce to 50,000, but that subsided in the ongoing upward move, and older coins have now become dormant once again. So regarding yesterday's news, of course, there's always the oddball. There's always this one person, or, there's always a wallet that does some crazy things. But ultimately, if we look at the grander scheme of things, it's looking like investors are choosing to not only take their coins off exchanges, but to hold them for the long term, which is very, very good. In fact, just today alone, we had El Salvador now owning a 1,120 Bitcoins, as the president said that they bought 420 more. These are amazing times to be living in. We had always talked about the day that Bitcoin would be put on the balance sheets of nations and countries, and now it is actually becoming a reality. How amazing is that right there? Not to mention the fact that I can tell you the retail has been getting extremely interested in cryptocurrencies. Obviously, as the price gets higher, average people get interested, and I can tell you personally, I've received many calls. For example, right here, calls from high school, people you haven't talked to. They always find a way to start hitting up the old cell phone again, right? But actually, check this out. So Coinbase's mobile app hit #1 in the Apple iOS store over the last few days. You can see right here, it actually topped out as #1. And if we come down here, #5 is crypto.com. So in the top 5, we have 2 apps related directly to cryptocurrency. So this is certainly showing an interest. I mean, obviously we have TikTok, YouTube, and Instagram. Everybody loves their social media, but the next 2 are crypto, with the first being Coinbase. So this is definitely very good for the crypto space. Lots of interest coming back in. Also, we had great news for anyone out there holding Ethereum. Ethereum 2.0 Altair Beacon Chain has gotten off to a successful start with over 98.7% of the nodes already upgraded. Now, if you don't know what this does, it brings light client support to core consensus, cleans up beacon state incentive accounting, fixes some issues with validator incentives. Quite technical. It was in proposal 2982, but at the same time, we've seen Ethereum also recovering quite well. Ethereum looking to potentially break its all-time high. And the one thing, before we get into the chart, I do want to show you a little bit of Ethereum analysis, but you can see right here that what's actually going on right now is some Ethereum blocks are becoming deflationary due to high network load. According to the Burn Tracker service, there's been $12 million less Ethereum issued in the past 24 hours than was distributed. With the introduction of the fee burning mechanism, all fees on the network are burned rather than going into the miners' pockets. Sometimes due to high network load, fees for one transaction can increase significantly. Unfortunately, this is still an issue that we're having with Ethereum. Some of these fees are a little bit too high still for the average person, but what this is doing in the long run is leading to a massive amount of burned coins. So just in yesterday alone, there were 16,228 Ether that were burned with a value of around 67 million. At the same time, only 54 million had been issued. And if it does continue down this track, we could see Ethereum absolutely skyrocket. And going back over here, you could see that we are at some of the most pivotal and critical resistance for Ethereum right here. We can't seem to break above this $4,200 level, which is very, very close to where we are right now. You can see the struggle that we had. We've had several wicks above it, but we can't seem to break it. I have a feeling that once we break through this level, obviously depending on what Bitcoin does, if Bitcoin decides it's going to take a dump over the weekend, well, then most likely everything will also be affected. But this could be huge, guys. I have personally been loading up on Ethereum for quite some time now. I am anticipating a massive, massive rally, and looking at these prices right here, people talk about end of year predictions. By the end of this year, you could potentially see Ethereum, I don't want to go as far as to say double in price, but I definitely could envision an Ethereum in the 6,000s even by Christmas time if it continues on this pattern with a phenomenal early 2022. So very simple analysis on Ethereum, not going to go too crazy into it. The level that I would start to get a little bit worried is if we go back down to around that $3,600 level. But right now, the markets are looking good. The markets are looking healthy. And as I said, I'm not even worried about the fact if we do have a slight pullback, because it does look like we are forming a very bullish chart pattern right now, especially in Bitcoin. Now, we need to talk about this news. A little bit bizarre, a little bit strange. Let me know what you think about this. The acting chairman of the Commodities Future Trading Commission, the CFTC, has told the Senate committee that 60% of currently traded cryptos are commodities. Okay. Sounds good, right? Nothing really crazy about that. We knew that Bitcoin is treated as a commodity, as property, right? Exactly. You don't have to pay taxes until you sell it, etc. But they're saying, in an action against Tether, specifically, the CFTC seemed to classify stablecoins as a commodity as well. So what does this mean if stablecoins are classified as commodity versus money? Well, my interpretation of this, and obviously, guys, I'm not a tax specialist. I do not come to me for tax advice. But the way that I interpret this is that they're going to be treating stablecoins the same way that they would be treating property and commodities, which would subject them to incredibly high taxes. Commodities have very high taxes. 60% of the gains are treated as long-term, with about 40% treated short-term. Stocks are treated differently, and anything held less than 12 months is considered short term. So, just to kind of break this down, say you had $5,000 And I mean, from what I'm gathering from this information is that if you had $5,000 of a stable coin, then you would still be subjected to capital gains taxes, which would mean 5,000 times 40% is $2,000, or in the higher case of 60% is $3,000. That's more than half of what you're holding. So not treating stable coins as money, but treating them as commodities could mean that you could end up getting potentially double taxed. Say you have some Bitcoin and you sell that Bitcoin into Tether, which we know is a taxable transaction. Now you're talking about the fact that if I sit in a stable coin and hold a stable coin, then I also have to pay on that. That's pretty insane. It's much higher than the standard 30 to 33% income, which also makes me wonder if you're out there and you're doing a job for somebody, say I do some work for someone online and they end up paying me in a stable coin. So is that not counted as income rather than the 30 to 33%? Now I'm paying 60%. Why could they be doing this? Maybe it's to get people away from these coins. Maybe it's to combat money laundering. Maybe I have this completely backwards and I don't understand anything I'm reading, but the way that I interpret it is that this is not really a good thing for US citizens who are looking to potentially hedge against the volatility by staying into the stablecoins. Please let me know if there's anything in here that I missed. If you know something that I don't, drop a comment below. What do you think about this? This is like double taxation almost, right? And then not to mention the fact that, of course, once you get taxed on your Bitcoin transaction into your stablecoin transaction, taxed into your dollar transaction, and you put that in your bank, then when you go out, you still got to pay taxes on the groceries that you're buying anyway. So this could be very detrimental, and I wonder what the real reason is behind this. What is the motive behind doing this? Let me know what you guys think about that below. Also talking about the fact that we do know that the SEC has not been very friendly on leverage trading in the US. We do know this. Now, keep in mind, some people, not going to say who or what, maybe you're one of these, choose to use VPNs. I am not going to be the one to suggest that. You know, I can never tell you guys what to do. What you do on your own time is whatever you want to do. But you can see right here that they say officially they are not looking to approve this. The Securities and Exchange Commission asked at least one asset manager not to proceed with plans for a leveraged Bitcoin exchange traded fund, according to a person familiar with the matter. The SEC indicated it wants to limit new Bitcoin related products to those that provide unleveraged exposure to Bitcoin futures contract, such as the ETF, which was launched last week, said the person close to the source. So eventually, could it be something? Possibly, you know, got to get your toes wet first before you take the plunge. Maybe that's just what they're doing. Maybe it'll never happen. Please be safe out there. Obviously, you know, I don't recommend doing that, and you really shouldn't be trading on exchanges that are outside of your jurisdiction. But hey, you do you guys. But this is the official statement from the SEC as of right now. And, you know, another reason that these guys are stepping in and they're very concerned is because it is a crazy space, right? For example, we had DeFi platform Cream Finance suffering a $130 million exploit. This is the third hack for the protocol this year. It was confirmed in a tweet by the company, and they said that their V1 lending markets were exploited and liquidity was removed on October 27th at 1354 UTC. They halted their V1 lending markets, and currently the token at the time of this had fallen around 26%. So I do obviously, you know, if you are new to crypto, understand that there are lots of opportunities to make lots of money, but there is also a lot of risk, especially when you're dealing with smart contracts, DeFi platforms, and things of this nature. So please be safe out there. And you know, I have to say it, don't invest more than you're willing to lose. That's the name of the game, which is why I do always recommend holding some Bitcoin, holding some Ether, holding those safe coins. I know they're not going to make astronomical gains, but you know those are safe. Those are your hedges against the other cryptos. Remember in yesterday's video, we have wealth preservation, which is Bitcoin, wealth generation, more of those speculative altcoins, but you do have to be ready to potentially lose it all. Not to end that on a bad note, but just got to be realistic. So on the bright side, let's end on a good news story and let's get on out of here. So Bloomberg has reported that Central Retail Corp, the largest developer of shopping centers in Thailand, is launching tests of its own crypto to be used by its staffers in the company's shopping malls and restaurants. The cryptocurrency that is being tested is called C-Coin, and so far it is undergoing the sandbox stage. And this is sort of how they break into it. You can just see blockchain taking over like mall points, credit card points, NFTs, gaming. I mean, it's incredible, the world of possibilities. And for all of you that still think you're too late to the party, you're not too late to the party. I can tell you right now, I know, I've been in this for years. Lots of people have been in it for years. You may be in it for just a few months, but I can guarantee you, you are still very early. So Let me know what you guys think. Obviously, having a look at this chart, we've already seen a little bit of a pullback right there at the top trend. And I actually forgot to say this, but just where I would consider it to be invalidated is if Bitcoin gets above $63,595, then the pattern would be invalidated. But at the same time, we also would be putting in a higher high. So right now, the way that I see things in a bull market, this is how I've always seen things, right? So a bullish chart is extremely bullish. A neutral chart is bullish, and a bearish chart is neutral, right? The trend is your friend. Right now, we are trending upwards. We could potentially be putting in, this falling wedge. So let me know what you guys think, and let me know if you will be trading it. Are you buying? Are you hodling? What altcoins are you interested in? Or do you want me to talk about certain altcoins? Drop them in the comments below. And that is it for me today. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. And of course, if you haven't seen these videos popping up right here, right now, make sure you check them out right now. Until next time, stay crypto. And of course, peace out.